So let's look at the poll results here. So it looks like that's really cool. So somebody on here has already received the PPP loan funds. That's awesome. And there's a few people waiting approval. We will be talking about PPP, tax updates, and FMLA. All right, great. So good afternoon. Welcome to our weekly Business Owner Advisory webinar. This is our second webinar, and our goal each week is to provide up-to-date and timely info to help small business owners navigate and manage their business during this crazy time that we're in. If you are new and weren't able to join us last week, our discussion covered the topics of the Paycheck Protection Program, PPP loans as they're otherwise known, and some of the tax updates in the CARES Act. We will continue this webinar each week, and you will get a copy of today's webinar emailed to you. If you find today helpful, we encourage you to share the replay with a friend or small business owner that you feel might benefit from the information, and even invite them to join us next week. This week we plan on building on some new info we have about the PPP. We'll also cover some tax updates, and we'll touch on some changes to the FMLA. To be respectful of your time and allow time for questions at the end, I will stop promptly at 1:30 so that we can answer questions. Last week, we had a lot of good questions, and I think we were able to field and answer maybe over 20, and we received a lot of feedback about the question time being helpful. So I'm definitely looking forward to that again today. During the presentation, you can use the Q&A button at the bottom to ask questions, and my teammate Becca will be monitoring those questions during the chat. If for any reason we're unable to get to all the questions, or if there's a question that perhaps maybe you don't have the answer to or need to look into some more details, don't worry, we'll follow up with you in the coming days to ensure we answer all your questions. So for those of you I haven't had the pleasure to meet, a little about me: went to University of Florida, go Gators. I know I at least have one Georgia Bulldog and one Kentucky Wildcat on here, so I had to throw that in there. Here at Canopy 360, we have 28 of us that love to help advise small business owners on advanced strategies on the subjects of accounting, tax planning, management consulting, and wealth management. We talked a lot about the Paycheck Protection Program last week. If you missed our discussion, there is a replay link on our Facebook page for Canopy 360. If you want to dive in and learn more about the PPP, I'd recommend you check out last week's webinar. Or if you don't have Facebook or would prefer to get it in email, you can send us an email to info@canopy360.com and request a copy, and we'll be happy to send it to you. Just to provide a bit of a summary, so to summarize the PPP program, it is an SBA-sponsored forgivable loan program available from SBA-certified lenders, typically your bank, and it is for any small business owner with less than 500 employees affected by COVID-19. The loan amount can be up to 2.5 times your average monthly payroll costs for the calendar year of 2019. And the costs included in monthly average payroll include up to $100,000 of gross payroll for each employee, plus the employer-paid health insurance premiums, and plus the employer-paid retirement benefits. Now that many of our clients have submitted their applications, we are seeing clients center their questions around maximizing the forgiveness of the loan they may receive. So how is the loan forgiven? The loan will be forgiven if the funds are used for payroll costs, interest on mortgages, rent, and utilities paid during the 8-week measurement period. Once you get the loan, at least 75% of the forgiven amount must be used for payroll, and then up to 25% of the forgiven amount can be used for interest on mortgages, rent, and utilities. The forgiveness is based on the employer maintaining or quickly rehiring employees and maintaining their salary levels and employee headcount during the 8-week measurement period. Last week we had some questions on the measurement period. The measurement period begins on the date the lender makes the first disbursement of the PPP loan to the borrower. And remember, we mentioned last week, when you receive your PPP loan proceeds, we think it's a best practice to open up a new bank account and transfer exactly the PPP loan amount into that new bank account. This will allow for ease of accounting to calculate your loan forgiveness. And I also think it is important and critical to ensure you fully understand the forgiveness rules and have a plan before you proceed with spending any of the PPP funds. So let's dive into the forgiveness a bit and put some, let's put some pen to paper on the numbers. The maximum loan amount is calculated at 2.5 times monthly average payroll. So if you think about that, 2.5 times the monthly average, that's kind of the same as 10 weeks of payroll. I think it's important to note that a key aspect is most businesses use 2019 monthly average payroll cost to calculate the loan. And the measurement period or forgiveness period is the 8 weeks following the day when you receive the loan. So if you think about it, the loan equals 10 weeks of payroll, but the forgiveness is for an 8-week period. So I think you should be thinking about, what is your monthly average payroll cost now, today, looking forward? And is it the same as 2019, or is it more, or is it less? To avoid unintended surprises, you will want to analyze these amounts and consider the detail. So, how much did you receive in the loan? What is your monthly average payroll now? What is my rent, mortgage interest, and utilities cost now? And will I have to pay any of the loan back? So let's look at an example. First, let's look at, what if your payroll is less now than it was in 2019? So using the example of a monthly average payroll of $20,000 at 2.5 times, your loan would be about $50,000. So what if your current payroll is $15,000 for the month? Then $30,000 of payroll would be considered for forgiveness. So if you're running $15,000 a month, or, that's a 4-week period. So we're looking at an 8-week period. So 30,000 of payroll would be considered for forgiveness. This is where a gotcha might come into play, I think. Remember, at least 75% of the loan forgiveness must come from payroll costs paid. So in this scenario, if you take 30,000 in payroll divided by the 50,000, payroll is only 60% of the loan. So in that example, there would be some loan payback required. This is why I think it's important to look at what is your monthly payroll now compared to what it was in 2019. Now, obviously, in this scenario where your payroll now is either equal to or more than it was in 2019, I think you should have no problem with forgiveness for any amounts that you spend on payroll costs. You'll also want to look at how much rent or mortgage interest, and then also how much utilities are you paying on a monthly basis, a month being the 4 weeks. And then that amount that you're spending each month times 2 can also be used or spent out of the loan proceeds for forgiveness. You want to do the math and see if you can get to 100% forgiveness. And we're urging our clients to do this math before you spend the loan money. So we're thinking, you get the loan proceeds, set it aside in a separate account, do the math and come up with a game plan, and then you'll kind of know ahead of time if you should expect to have to pay any of the loan back. As we get more details on the loan forgiveness, we'll include it in future webinars, and I do fully expect more guidance coming very soon, so stay tuned. Reason why I say that I think guidance is coming is I was talking to a banker just yesterday, and so yesterday was Tuesday, and they got new guidance on Monday night. So it is the government, the banks, everybody is kind of learning as we go throughout this process. So I fully expect there will be more details on loan forgiveness to come. We've been asked the question by a few clients that have actually applied for the PPP. We've been asked, should I let my employees go and terminate or furlough them and they can claim unemployment versus maybe not terminating and then furloughing them and just paying them out of the PPP loan? In my opinion, for the health of the economy, I'd probably use the funds. I think this is a case-by-case question, but I'd probably use the funds for the employees first, just to try to help the health of the economy, and I think that's what the purpose of this program is. And then if those funds run out and we're still not back in business, then I'd go the route of unemployment. But you'll have to kind of look at your situation and make that determination. I did yesterday see a story about a restaurant in New York City that was going to use the PPP money to stay in business and had no intention of using it for payroll, and was just planning on paying it back. And that's always an option to consider because, given that the PPP loan program has an interest rate of only 1%, it's very low, and a 2-year period to pay it back, that's always a consideration to think about. We've also had questions about what to do for 1099 independent contractors. There in the beginning, there was some confusion, but the rule is that employers cannot include 1099 contractors in their calculation of monthly average payroll. So for example, we pay a cleaning service, we pay an IT company, those are 1099 independent contractors. We cannot get a PPP loan for what we pay them. Those 1099 contractors have to file for their own PPP. And so then their PPP loan amount is based on 2.5 times the net profit from their business. In the case that they're a Schedule C, sole proprietorship, in the case that they're an independent contractor, but they are running their business as a corporation, then their PPP would be based upon whatever wages they pay themselves. So what are we? Let's see. So more of what we're seeing. All the banks are still very overwhelmed. Yesterday, I talked to 3 of the local market presidents, and they think that they're going to remain in this state of just crazy busy until they get beyond the forgiveness period, which could extend into July, August, September, based on loans being funded in the next few weeks. Secretary Mnuchin said the other night, I think on the TV, that there's rumors that the funds are running out. I saw a fact that over 860,000 applications for about $210 billion of loans through 4,500 banks have been approved as of Monday. So what does this mean for you? Should you be concerned about getting your PPP funds? Well, let's think about the process. So after you provide your application to the bank, they review and sometimes request other documents before registering you with the SBA. So once you're registered with the SBA, you will be assigned what's called an E-Tran SBA account number and an acknowledgement that you have funds allocated. In my opinion, this is when you're okay and do not need to be concerned about getting funds. So once your banker tells you that you have an SBA account number and that your funds have been allocated, I think you're okay. The banks are closing supposed to occur about 10 days after that. So I think you'll be okay once you're in that category. Those businesses that have not received the confirmation of account number and that their funds have been allocated, just based on the sheer number of applications out there, I think if you don't hear back from your bank in the next few days, probably by the end of this week, you may be at risk of not receiving any of the first round of PPP funds, which was allotted at $350 billion. The government did discuss last week the topic of providing another round of PPP funds at an additional $250 billion, and this was some things that it looked like they were going to fast track, but it was blocked by the Democrats. And I haven't heard, as of today, I haven't heard any kind of updates as to whether there will be additional funds after the first $350 billion is loaned out. So on to some of the tax updates. There is an employee retention tax credit. So what that is that will pay you or will allow you up to 50% tax credit on a total of $10,000 in wages. So you can get up to a $5,000 tax credit for wages that you've paid to your employees between March 12th of this year and January 1st of 2021. I think it is important to note that if you receive the PPP loan or any other assistance, there's some state bailout things also, and if you get any of those things, then you will not qualify for this credit. Have you received your stimulus payment yet? The IRS has launched a new web tool allowing quick registration for those who do not normally file a tax return. So we do have a link in the presentation, or you can go to irs.gov and you will find it on the home page. You can also use this link if you need to update your bank account information with the IRS. And I think another cool thing to point out about the stimulus payment is when you file your tax return for 2020, there will be a double check. If you get too much stimulus payment, don't worry. If so, we don't think you will have to pay it back. But what if you didn't get enough? There will be a way, if you didn't get enough of your stimulus payment, there will be a way to get the rest applied to your return when you file your 2020 return. So you'll be able to take full advantage and make sure you recoup all of the stimulus payment that you're due. I mentioned this last week, the tax advantage distributions of up to $100,000 out of IRAs. I think this is very interesting and helpful. We don't typically recommend that you take money out of retirement to fund your living or your operations. Typically, we want to see our clients keep that money in their retirement for the future, but I do think this is a helpful situation if you get into a dire spot where even if you are younger than 59 and a half, you can pull out up to $100,000 out of your IRA. There's no 10% penalty. There will be tax on that distribution, but you can spread the tax over 3 years. And then you also have the opportunity to put the funds back in within the next 3 years, and it would be treated as a rollover and there would be no tax. So the IRA deadline was extended to July 15th, 2020, just like the tax deadline. So today's actually April 15th. We're all used to being able to take a little bit of a break, but the tax deadline has been moved to July 15th, 2020 as well. So there's nothing you need to do. You don't need to file any extensions. And also, in addition to being the due date being July 15th of 2020 to file your 2019 return, it is also the deadline of July 15th applies to any tax due that you have, any liability that you owe for 2019. It applies to your first quarter and your second quarter estimated tax payments for 2020, which those are normally due, one's due today and one's due in June, but all of those payments are not due until July 15th. We're advising clients to set those funds aside and don't spend them, and then wait until closer to the end of June or beginning of July to mail those payments in. This way, you'll leave yourself in a situation of maximum flexibility with your cash flow. We do have some clients that just don't like those bills hanging over their head and they want to go ahead and just take care of it. So that's always an option as well. But if we were given advice, we'd probably say, you know, put a sticky note on that money, put it in your savings account, and don't send it to the IRS until the end of June. Just gives us a couple more months of transparency and visibility into the future before sending that money out. And then, do you have any employees that are unable to work due to COVID-19? There are some FMLA payroll tax credits. We also have a link to the details of the credits that are available. And I believe Becca has posted the links to the payroll credits and also the link to the economic stimulus payment in the chat. So if you want to look in the chat, you'll see the links there. Those payroll credits, if you have any employees that are unable to work because either the employee is sick, they're under quarantine or self-quarantine, they are caring for someone with COVID-19, or they're caring for children due to the fact that the kids' schools closed. If you have any employees in any of these situations or circumstances, be sure to work with your payroll company or whoever processes your payroll to ensure you claim the appropriate credit. And that link will show you what the various credits are that are available. All right, so let's get into some of the questions. Okay, so Mark, I am part of a franchise. If the franchise is not a member of the SBA, they are turning down the loan. I'm not, I haven't run into that question yet. I know that there's a question on the PPP application that asks if you're a franchise. So you may know the answer, but I will look into this and we will report back to you because I'm not 100% certain on that. Connie, do you have any information regarding the SBA, the EIDL loan program? So that EIDL loan program, you can apply for directly on the SBA.gov website. And so I was talking to a client earlier today, and they applied for the EIDL loan program last Wednesday or Thursday, and they still hadn't heard back. So they were going to call the SBA and try to find out a status on their loan. I have heard that the EIDL loan program has also been extremely popular and received tons of applications. But you can, I think it's 3 screens, and typically what they're asking you for is either what was your lost revenue over the last 12 months, or if you're a business, or if you are a rental landlord, what was your lost rents or payments, and you can apply. But we have seen that that program has been pretty popular, and like I said, we still have some clients from middle of last week that haven't heard anything. Cheryl, with respect to the 25% for utilities, are there any specific utilities that apply to reach the 100% forgiveness if needed? That's a good question. I have not seen any details yet on what particular utilities are going to count under there. I would think your electric, I would think your internet and your telephone, but I have not seen any specific guidance that kind of lists it out with, you know, this and this and this. That's a good question. We'll see if we can't find some more detail on that and have that answer ready next week. Connie, what if your business was formed in 2020? Previously, the business was treated as investment income. Is the PPP program still available in this circumstance? That's a good question. So you had, if you were a new business, you had to have employees on the payroll on February 15th of 2020. So if you did not have payroll or employees on payroll as of February 15th, 2020, then unfortunately you're not going to be able to qualify because there's no way to retroactively get employees on the payroll. I have received notice that my PPP is ready to be funded. Can I wait to accept it until when I am ready to receive it, or will funds be taken back? That's a good question. I think lots of people would like to be in your boat that, you know, that your PPP is ready to be funded. I am not 100% certain what the guidelines are. I know that the SBA is pushing the banks to get the money out to small businesses. So I think you should talk to your banker about that and see what their guidelines are. If I had to guess, I would assume that they're probably going to be under a, you know, they're probably going to be under a time crunch as to when they have to fund your PPP. But I'd talk to your banker. You're welcome. All right. If you miss checking the box on the application for rent and utilities, can you still use the funds for those items? That's a really good question. I would expect that we're going to get more detail on the guidelines of forgiveness. Everything that I've seen so far says at least 75% of the forgiveness has to be for payroll. So I would think, I'm not certain. I would really just be guessing. So I would think we might be able to still use some of those loan proceeds for rent and utilities, but until we get those guidelines, and we do plan to update this this webinar next week with more detail on guidelines as soon as we have them. So we will be looking for the answer to that question. Okay. At this time, let me see if there's any questions in the chat. If you have any other questions, please let us know. Mark, with your question, with regard to your question as a franchise, we will look into that and get back to you right away. Okay, I don't see any more questions, so I want to be respectful for your time. We hope you found today helpful. We're happy to customize this webinar to your liking. So do you have any ideas of topics you'd like us to cover? We did have a few clients send us questions leading up to today. So if you have any questions or topics you'd like us to cover, please let us know. If you have any ideas for items that you want us to talk about or things we should consider in this webinar, please let us know. We're open to, you can send those ideas and questions to info@canopy360.com. You know, we're here to serve you as our valued small business clients, so we want to make this valuable to you. So please let us know if there's any other ideas or questions you'd like us to cover next week. We hope to see you next week, Wednesday, 1 p.m. We'll start promptly at 1. We'll start with questions at 1:30, and sign up space is limited to the first 100 attendees. I didn't look at the latest numbers, but we're right around 70 attendees right now, so be sure to sign up as space is limited. And thank you for joining us. Paul, you're welcome. Let's see. Becca, is there anything else we need to consider before we wrap it up today?
No, we are good. Thanks, Russell.
Okay, let's see. I see some things in the chat. All right, Mark, you're welcome. James, you're welcome. All right, well, thank you guys for joining us today. We'll do it again next week, and hope you all have a good rest of your week. Thank you.